Hi guys. Last time we talked about how to read life insurance illustration, policy illustration, and mostly focus on the understanding the financial strengths of different life insurance carriers. Notice that basically you can take away with 2 points. Number one is that you can for the most time you don't need to worry too much about the financial strengths because the fact that the insurance carrier is operating in your state typically means they pass at least the minimum requirement by the state government, by the state insurance department insurance. So for the most time, you don't need to worry about that. Uh, on the other hand, you do need to be knowledgeable because the life insurance policies are unlike home and auto insurance. Home is renew every year, auto insurance every 6 months, but life insurance contract can last 30 years and even longer, basically a lifetime, right? So you do want to care about life insurance carriers, their financial strengths. Like I said yesterday, that the highest rating is A plus plus. Okay, we do have some carriers doing that. Lincoln Financial. A bunch of others. John Hancock's. So, but even if you got an A rating insurance carrier, I don't think you need to worry about that because rarely we have bankruptcy to deal with it. But you do, on the other hand, the other line of protection is the state guarantee fund. Okay, this basically the similar work, similar mechanism like the fair plan. All the life insurance carrier operating in the same state will get together and get the fund in case your insurance carriers goes insolvent or bankruptcy altogether. Then those guys will cover up. But remember that they usually, if it's an individual life insurance policies, they only pay up to $300,000. It varies by state, but in general, most states won't cover more than $300,000. What if your policies promise you to pay like a $500,000? Then even if the state guarantee fund pay you all the money up to $300,000, you still have $200,000 that are unpaid. However, this is more complicated, right? Because it depends on when the life insurance carrier goes bankrupt or insolvent. If they become insolvent 10 years after you bought the policy, then you only paid like 10 years premium. So I don't think you will, worry. You will have you have to worry about only getting $300,000 back. Remember that you only pay a limited amount of a premium because in 10 years time you cannot pay that more than 300,000 dollars. It depends on the policy. 'Cause some people they pay that lump sum. They do that one shot. They have money. They have cash, and then they pay that, and then that's a different story. But for the most part, remember, the state guarantee fund will only pay you a portion of the death benefit. So that's why I never expect your full death benefit like 500,000, 1 million, 2 million. Don't expect that you get all that money back. That's less likely. Okay. The other point is that it's also important that the state guarantee fund, they don't care about how much premium you've paid. So their job is to get you coverage in terms of a death benefit. Okay, so if your death benefit is $500,000, they pay up to $300,000. So their job is not to They're not to find out how much premium you've paid so far, and their job is not, it's not their responsibility to refund all your premium. That's not what they do. Even though, that said, after saying that, even though that we need to remember that death benefit is typically bigger amount of money than the premium that you paid. So it's actually better for them to cover your death benefit instead of your premium that you paid. Today, let's get started with the death benefit. Okay, so life insurance policy, it's like a death benefit. It's like going to the restaurant. You order the main entry, right, and then you also order some dessert or appetizers, right. So the death benefit is the main, major entry, major dishes, right? And then your cash value accumulation will be kind of like a dessert or appetizer, right? So it gets benefit. You really pay attention to that. In fact, oftentimes they call that $500,000 policy or $2 million policy. That basically means that they're referring to the death benefit. That means that for $500,000 policy, they are paying the death benefit on the policy is supposed to be $500,000. For 2 million, same thing. They pay you the death benefit is 2 million. So that goes by the same logic. Here is a question. Let's say a hypothetical scenario that I bought a life insurance policy today and tomorrow I died right away. Then would the life insurance carrier pay you back, pay all the, let's say my policy is $500,000. Would they pay my family, my relative, my daughter, my parents, my sister, brother, my siblings, are they gonna supposed to pay $500,000 even if I, only bought the policy yesterday? The answer is yes. That's why it's that's make the life insurance policies very good. It's much better than the CDs and the deposit and the checking account, the saving account, right? However, that said, they will pay. Yes, they will pay you, even if you possess the policy just for one day. The key is two keys. Number one, is the policy activated? Is the policy enforced? Enforce the same thing as activated. Okay, so if the policy you sign the policy but has not been activated, then sorry, you don't get the money because the life insurance contract it's not effective. Okay, so when do they know that? What's the data point that they will find out that whether the policy is activated or enforced or not? For most cases, a lot of insurance carriers, most cases that whenever they received your first payment of premium, then that they will consider that point that your life insurance contract will be enforced or activated. Okay, so that's one thing. The second thing is that if you bought a life insurance policy and died tomorrow, you will I will guarantee you that they will check out, they will scrutinize the contract, and they'll see if anything and everything that you said in your application is true. If there is something called the material misrepresentation, meaning that some basic fact that you stated it's not truthful, then sorry, you won't get all the $500,000 back. Why? Because it depends on that's why it's very important to know that what is the materialistic misrepresentation. For example, if you're a smoker but you say you never smoke, that won't. If you have some pre-existing condition but you said you're healthy all the time, that will be misrepresentation, but it's material, meaning that matters. So they will check that. However, usually, even if they find out that you lied on something, they will still pay you some money. Instead of pay you the full $500,000, they pay a portion of it, right? Because most likely will go to the court, and the court will decide. And if you lied, the court will usually decide not in your favor, but more to the insurance favor. So those are the things that you have to be truthful. And the other issue is that the suicide clause. Most life insurance carriers contract they have a suicide. If you you have an intention to kill yourself, and then you bring kill yourself, and then basically right after you sign the contract, right after you pay the first premium, and then you kill yourself, usually they will the insurance carrier will check that out. They have something called contestability period. Contest meaning that the insurance company they can contest it. They can find out if that everything's right, if that you try to purposely kill yourself just to leave some big money to your families. They will check that out. In fact, a lot of movies on this. So let's stop here.